Welcome back to the Bryan Devore Connection. I'm your host, Bryan Devore. There are a lot of different ways you can live your golden years. You can age in place at home. You can maybe move to a senior living community. But both of those options come with cost. What are some of the ways that you can help pay for some of these things? Well, here to talk to us today about some regular programs and some unique programs available for you is my friend Mark Maimon with Luminate Bank. Mark, how are you doing today?
Ryan, very well. Thank you. Thank you for having me.
Yeah, my pleasure. Thanks for coming. I know you came from Los Angeles, so I greatly appreciate you coming down and doing this because I think it's super important to share what you do.
I agree. It's hard to plan for senior living without knowing how you're going to pay for it. So,
Yeah, it kind of goes hand in hand, doesn't
yes,
it?
it very much does.
Tell us about Luminate Bank.
Sure. So Luminate Bank is actually a bank created by mortgage professionals. So it's designed for flexibility and creativity, and really gives us the platform to do what we do, to be able to serve seniors and other regular first-time home buyers and everybody in between.
Got it.
But our focus is really on the senior community, and our bank has been great about allowing us to do what we do and get creative.
So tell me why you've had to get creative. Because I know there's different challenges that come up when it comes to working with seniors.
There are. The biggest challenge by far is that traditional underwriting is based on income, and seniors are past their working days. So if you're asking a senior for their pay stub, they're gonna laugh at you,
Right.
right? And you should be laughing at yourself.
For asking that question.
Right, exactly. So the common thread through all of our products is that they're designed to not be based primarily on income, because it's just not a viable option. If you hold a senior to the same standards that you would hold a working adult, it's just not going to work.
Yeah, they would just never qualify for a loan.
Right, which is why most people think that seniors can't qualify for loans. But that's where we come in, is we've curated a whole suite of products that allow seniors to be able to qualify, and pulling in different unique niches from different lending sources that we have to try to create a whole series of opportunities for seniors to be able to pay for care, whether it be in-home or potentially moving into a community.
Got it. So, you and I met, and we first were talking about, what you do, and it's opened my eyes to how many different options there are. Again, whether people want to age in place at home or to a community. So let's talk about both.
Sure.
So someone wants to age in place in their own home, but finances becomes an issue when it comes to financing care, financing remodeling, all kinds of things. Talk about what you offer for that.
Sure. So the standard default for seniors has always been reverse mortgages. For me personally, it's one of my least favorite products, even though it's heavily marketed. They're very popular. A lot of telemarketing to seniors, which please don't take those phone calls.
Yeah.
But it's become very popular, in part, in my opinion, because people think that there's no other options. So reverse mortgage is one option when you stay at home. One of the reasons I don't like it is because if your needs change and you need to move and you need to relocate out of the home, you basically have about 6 months to pay off that loan. And a lot of times seniors nowadays have built up a lot of equity in their home, which is great, but it also means they may have a big capital gains tax in the event that they sell it before they pass. So some of the products are just very creative use of guidelines. So for example, one of our go-to options just doesn't have a requirement for a statement of employment or income. So it probably was originally designed for entrepreneurs who were maybe new at their jobs and couldn't disclose a 2-year history of employment, but the same niche applies to seniors. There's other products where you can open up a line of credit where maybe you don't have income, but maybe you've got some money in an IRA, and there's some creative ways we can convert those IRAs into additional income on a loan application without doing anything with the money. You don't have to liquidate it, you don't have to move it, you don't have to do anything. Just the fact that you have it can turn into extra income to be able to qualify for a line of credit that you can draw on to pay for your care needs.
And how much are we talking about is available?
I mean, usually for a line of credit, it could go up to 90% of the value of the home.
Oh, wow.
So it's another benefit over a reverse mortgage, which is usually going to cap you somewhere in the neighborhood of 50%.
Yeah.
So you can really stretch the limits a lot more. For the other product I mentioned that doesn't require employment or income, it's closer to 75%.
Got it.
But still a good percentage of your equity. And as you know, people have a lot more equity now. I think we hit an all-time high this year.
In the trillions.
In the trillions, exactly. So it's just a matter of thinking about how to use your home as an asset. Most people don't think that, so they might automatically think to sell, and sometimes that is the right move. But at least people should be aware of the financing options. So that's why we're here today.
And so just real quick, we talked about what people don't need. They don't need to have the income or the occupation. What do they have to have?
So in many cases, at least a decent credit score. Sometimes for seniors, that's a bit of a challenge if they haven't kept up with their bills, or they're not in the mind frame of the regularity of paying your bills every month on time. So sometimes we do see some credit challenges. But it's primarily driven on the equity they have in the home. Credit score is a factor, but there's some flexibilities there, usually down to about a 620 credit score. So you don't have to have perfect credit.
Yeah.
And some programs are driven by how much you have in assets. So they may require that you have 3 to 6 months, for example, of housing payments left over after closing. Some programs completely waive that requirement because you're technically cashing out money. So why would they make you have extra beyond that? So it's a little more common sense.
Yeah.
But it's different for each program. So this is the products that we offer are not a one size fits all where it's exactly the same for every client. What we're doing is we're matching the profile of the client to the right type of loan that they need and that they will qualify for.
Got it. And so some of the products, the products you just described are really good for someone who's staying at home. They get an equity line off their property. They can use that to remodel their home, put in ramps and grab bars, redo the shower, bring in care, whatever they need.
Build an ADU is another common one.
Yeah, right, exactly. Yep. Great option for people.
Yes.
Now you have people who don't want to stay home, who choose that they want to move to a senior living community for a variety of different reasons. What are the different programs you have available for those people?
Sure. So I would say the most common one is a bridge loan. Bridge loans are basically, just the way to understand it's a short-term financing solution. It's not designed to be a long-term mortgage. So what you do is you basically borrow money against your current home to be able to pay either for an entry fee if it's a CCRC type of community. Those are pretty substantial. It could be to pay for care. It could be if you have a long-term care policy that has a 90-day elimination period and you can't get access to that money for a period of time. So very flexible and allows you to borrow against the value of your current home so that you can accomplish what is, in my opinion, one of the most important things for seniors. They have to move first. Right? They're not going to sell first and then figure out where to go.
Right.
Especially because sometimes places will have a waiting list.
Sure.
And so you don't know when your opportunity is going to, there's going to be a knock on the door for that opportunity. Exactly. So a bridge loan is really popular. There are some programs that don't require any payments for 6 months. They'll defer the payments. So if seniors have a concern about being able to make the payment for that period of time, we can accommodate it that way. There's other options to just pull out a little extra money to be able to make the payments. So different ways to kind of accomplish the same thing. But the goal is to be able to allow the senior to relocate comfortably first, then do whatever updates they need to do to the home, get it ready for you to sell, so that they can sell it for top dollar and not leave money on the table.
Right. So a lot of the clients who I work with are in that same situation where they want to move into the senior community, but they need, like you mentioned, the CCRC may have a buy-in as low as $100,000, as much as $1 million or more. Or even if it's just a month-to-month community, but they need the first month's rent and a community fee, and they're house rich but cash poor. So this is a great option for people who want to move first. And I always recommend, if you can, to move first, because then it's easier to show, easier to fix up, and they'll have the money from the bridge loan for that to do those things too. So it's really a win-win for everybody.
It is, yes, exactly. And that's exactly what it's designed for. And oftentimes, one of the misconceptions about bridge loans is that because it's a short-term mortgage, it should be a little less expensive. It's actually the opposite. So bridge loans can be on the expensive side. There's usually fees associated with them, like origination fees, because if you think about it from the lender's perspective, they're not going to make money off of interest if you only borrow for 2 or 3 months.
Right.
It's not worth it for them to take a risk with hundreds of thousands of dollars potentially for that. So there's usually fees associated, but what oftentimes we talk with clients about is, well, what if this is the product that allows you to fix up your home so that you can sell it for more? Usually that far exceeds the actual cost of the bridge loan.
Absolutely. You got to look at the big picture.
Yes. It's a multi-step process, especially for seniors. Again, relocating first, fixing up the home, doing whatever they need to do to get it show ready, and having the money available to actually do those things can be really helpful.
Yeah.
And we can get into some examples later, but it's really an impactful product. So
Yeah.
bridge loans, I would say, are definitely the number one product we use when people are trying to relocate out of the home.
Good. Well, actually, that was a perfect segue because I wanted to talk about some examples, some
Sure.
success stories
Sure.
that your clients have had.
Sure. So we had a senior couple who was trying to move into, this was a CCRC community. It had a pretty substantial entry fee. They had lived in their homes for many years and had a lot of equity. So we were looking to do a bridge loan, but one of the reasons it was so impactful is because their home actually had a foundation issue that they had ignored for a long time. And it was, they were safely living in the home, but it was definitely something that a buyer would have called out during an inspection and probably would have impacted the sale price if, foundation's a big deal.
Sure.
So the bridge loan was used to pay for the entry fee, to pay for 6 months in the facility to make sure that they had enough money available to do that. And also paid for the repair, which was a pretty substantial one, to the foundation, so that when the agent went to sell the home, they don't have to sell it with an asterisk on it, where, maybe the job would have cost $50,000, but a buyer would have bid $100,000 less because they don't want to deal with it.
Right.
So the cost of the bridge loan ended up being less than what the difference of what their agent thought they would sell it for.
Oh yeah, big delta in that case.
Yes, because it's such a significant issue, and it's a reason why some buyers would come in and walk away from a transaction.
It's not changing out carpet and paint. I mean, it's foundation. It begins and ends there.
Right, exactly, and some buyers would just say no and move on, but that's not what you want when you're selling your home. You want as many buyers excited about the house, not scared of it.
Yeah. So they took advantage of this loan. It helped them get the home sold, and they moved into the community. And then how long did it take for them between the time they took out the loan and the time they repaid it?
It was about 4 months total, from start to finish. And it probably could have been sooner, but they kind of took their time with relocating and then dealing with the foundation. They didn't want to deal with the foundation while they were still there. So that was somewhat elective, but the program that we used allowed them to defer the payments for 6 months, so they never made an out-of-pocket payment on the bridge loan. So it was a perfect, seamless transition to the new home. They made more money by, it sounds counterintuitive, they made more money because they incurred the cost of a bridge loan than they would have had they just tried to move and sell the home.
Well, and that's the thing, because when I'm coaching people on what they should do to get the house ready, it's like only spend money on the things you're going to at least get the money back or make money on. And if you're going to make $50,000 or $100,000 in the case of a foundation, potentially, it's well worth doing the bridge loan versus what other options do you have?
Right.
You're very limited in your options, but the bridge loans gives people a lot more flexibility.
It does, and in this case, it allowed the seniors to not have to actually live in the home during the drilling and all the things that had to happen to fix the foundation.
Yeah.
I think they actually had to raise the home. Like it would not have been livable during the project. So the idea was to move the seniors into the community first. And also they had been waiting for a while for the unit to become available. They were on a waiting list.
They had to jump on it.
They had to jump on it. So it was just a seamless, perfect solution, and it took as long as it took, but that was partly because of renovation.
Right.
And they settled in, paid off the loan in 4 months, and never made an out-of-pocket payment.
That's great. What other examples do you have, either for moving to a community or aging in place?
Sure. So maybe we'll take one aging in place, switch it up a little bit. So we had 2 sisters who had inherited a home. This is in the Los Angeles area. And so they had a lot of potential capital gains tax at stake, and they really, to be honest, wanted to stay home. One of them was bedridden, the other one was a little bit younger, a little bit healthier, but still they were needing home care. And their home care needs were rising, and their cash on hand was declining fairly quickly. Home care can be pretty expensive, to the tune of hundreds of thousands of dollars a year, especially if you need 24-hour care.
Sure.
So in their case, they had a little bit of money still left over in an IRA, and they just needed access to the equity, but they didn't want to actually borrow it yet because they would need it over time.
Yeah.
So in this case, what we did was a line of credit product. We were able to get them approved for about a $600,000 line of credit, which would buy them probably enough time till the point where they would probably need to move into an assisted living community. It gave them several years in the home, and they were able to, over time, pull that money and be able to stay and live the way that they wanted to live and pay for the care that they wanted to get. The alternative was to cut back on the hours that they really needed support with, especially with one of them being bedridden. It was hard for the younger one to care for the older one in those hours that care wasn't there.
And it affects both of them.
It does, and it negatively impacts their health. It's really hard on people to be a caretaker, but when you need care yourself, it's even harder to be a caretaker for a sibling or a loved one.
Yeah.
So this allowed them to pay for the care that they needed, not have to cut back on hours, which was one of the things they were really nervous about. Stay at home, and they're still in that home today, but at some point they're probably going to move into assisted living and sell it, and we'll probably look at bridge financing for them at that point.
Right.
But this allowed them to age on their own terms, and that's what's most rewarding for me of doing this work.
Yeah.
Is that you change the later years of people's lives. I mean, I know it sounds a little dramatic, but
it's true though.
It really, like, you see the impact on people and just the relief that they feel when you have a solution for them.
Yeah.
And there's so many unique scenarios. Every single one of our calls with new families is different. They all have different circumstances, different family members who are involved, maybe for better or worse with some of them.
Right.
But there's always nuances, and we've curated this whole suite of products to try to accommodate all of the most common issues: the relocating before you sell, doing repairs, lack of income, lack of mental capacity, loans to a trust instead of a loan to an individual, where you can avoid some of those issues. And then we even, going beyond that, we even do estate and probate loans as well if you have heirs who are looking to pull money out, or if the estate actually needs to pull out money in order to finish off the estate. Do repairs, foundation repairs, that type of thing.
Right.
You can actually borrow money even after the senior's passed away.
Okay. Lots of great products, lots of great programs. The information is on screen, the website, Mark's number. Give him a call, because no matter pretty much what situation you might be in, he has a product for you, and it really gives people freedom. Flexibility, freedom to do what you want to do in the time that you need it. So, Mark, thank you very much for coming today and sharing all these amazing resources. I really appreciate it.
Thank you, Bryan, for giving me the platform. And we'd be happy to help anybody that needs it. It's really rewarding for us. So
great.
Give us a call.
Thank you.
Thank you.